Let's chat this out as we count down to the end of this year. How's this market feel to you?
I think Mike really said this best. It feels like we're getting some ebbs and flows. I'm actually happy to see a little life in the AI trade on this Friday. We think that volume's likely to come way down sort of post-Wednesday. So Monday and Tuesday, if we can continue a little bit of life on the AI side, I think that would complement some of the rotation that we've seen. Oracle leading the way today, I think, is particularly impactful just with all the questions. But I think Courtney made a great point. It's going to be about kind of coming into the first couple of weeks of January. Is the U.S. consumer still engaged? How did the holiday season work? Today's the last day, really, to get Christmas shipping out. So it's going to be interesting to see how it plays out, given some of the puts and takes that we've heard from the consumer retailers so far.
What do you think the most durable investing theme is going to be in 2026?
We still continue to think that AI is going to be a tailwind, Scott, but I think we're just going to have to see that CapEx coming from other companies outside of technology, whether it's industrials or financials. I think the drug deal today with a number of companies agreeing to price cuts on the healthcare side could also be a tailwind. But we're really looking at this for companies to put the rubber where it meets the road in terms of being able to commit to AI CapEx and justify the spending that the hyperscalers have done in some of those valuations.
You want to stay large cap for the most part?
We like small cap coming into this year. I mean, we've seen a nice rally, but it's been primarily in low quality small caps, a lot of low or no earners, economic momentum in terms of, stronger economic growth next year, lower rates, and this infusion of liquidity in April and May around tax time. We think that actually points to continuation of strong small cap performance in the first half of 26.
So are you saying you think that rates are going to continue to go lower?
We think that there's at least going to be another cut in the first quarter. And then it's a wait and see in terms of what happens with the Fed in the second half of the year. I think that right now, economically, with jobs softer but not deteriorating rapidly, and the potential for inflation to continue to come down despite the fact that we think that CPI print from yesterday is going to be revised up, there is fodder for the Fed to get softer or easier in the second half of next year. But we're really just looking at maybe one more cut in the first quarter. But still, the transmission of the cuts we've already had so far.
What about U.S. versus other places?
Yeah, I mean, or U.S. in terms of there continues to be meaningful strength. I would say we're optimistic on Japan, and so we like developed ex-U.S. There's a big Japanese component to that. Europe is a bit of a mixed bag, and so trying to be very thoughtful. But EM's looking more attractive, Scott, even with some of the concerns about the Chinese consumer and that real estate overhang. EM's starting to look more constructive. We're more constructive on EM as we go into 26.
Looks like you like Korea when you talk about emerging markets. Is that right?
Yeah, I think if you look at kind of the next phase of the AI trade, I think that we see some opportunities in Korea. And so being able to have a diversified basket in EM, don't think just China when you're thinking about your EM exposure.